If you're looking to trade the pin bar as a trading strategy, in this video, I'll be sharing with you how you can identify the best pin bars for the highest probability trades. Now, some of the pair that this works best on are USDJPY, EUR USD, and GBP USD. Now, to start out, we're going to be using USDJPY. Here are three things to consider. 1. It must form at a zone, a support or resistance, or in a support or resistance area. 2. It must have room to the left. So you must have at least 7 candles to the left. So you must have some space. And 3. It must form within the lower third of the previous candle. So let's jump on the charts and identify a few. It's very important that you backtest. Don't take what I say as gospel. So here, as we look at this one, it's not necessarily in the lower third. You want to find it down here more. And I must mention, the longer the wick, the better. So here we have this first one here. So we have room to the left. It's in the lower third. It could have been better if it was down here, but this is a pass, right? And we can see it's in a support area, because if we look to the left, we can see that it's in a zone area. Now let's take this. So we're going to be using this section as the zone. Now, why am I using this section? Because here is the last area that price turned up from. And if you look, price broke up, came down, retest, and went up. Now, why I wouldn't take this one? Because the pin bar itself is not formed within the zone like the head of the candle. So what would be more ideal would be if this was the head. Let me change this to red. Fill. Let's change that to red. And let's say this was the body of the candle. Let's use this small trend line for now, right? If you had this setup, this would be more ideal compared to this. I'm not saying it can't reverse from here and go up, but this would be better. So things like this, you have to use a filter out your trades. Now let's go left again and look for another one. So here we have another one. If we look to the left, we have some significant room. We have a long wick, right? And where it is formed, it is in a good location. It is in the lower third of the previous candle. Now pay attention to this zone, right? Price came here, fell. Price came here, fell. Rejection, rejection, rejection. Price eventually broke up, came down, and retest. So this would be a good pin bar. Now here we have another one. Pin bar, but why I wouldn't take it? Because it's not in the range of the previous candle. Even though it has a long wick, it doesn't clearly form in a zone, right? Compared to this one up here. So the zone for this would be, more here. So if we had the body of the candle here, then we could consider that a good sell signal. And even though price returned, you wouldn't have gotten a minimum of a 2-to-1. Now when we look at the previous one, you will see that price gave you a clear 2-to-1 move. Now here we also have another one. If you look where is this formed, it's not formed at the lower end of the zone. It's formed in the middle. So let's draw two horizontal support and resistance. Right. So support, resistance, and look where this one formed, almost in the middle of the area. Now look at this one compared to this. Not the previous candle is not a very long candle, so you won't necessarily get the lower third here. But look where it formed in terms of the zone, right? The head of it is almost at the bottom of the zone. The wick is long, and if you look, we have a lot of room to the left. So this would have been a good trading setup. So here you can see that price went up. Even if you had a stop loss here, price came down, didn't hit the stop loss, and continued to went up and give the 2-to-1 risk to reward ratio. So that is how you go about identifying good pin bars for your trading. And that's basically it. Backtest and ensure you stay consistent.